Unfortunately, the share price is now $13, which is a great opportunity. MAG is on sale. Thanks for coming along, everybody. Lots of familiar faces and a few new ones, which we like to see as well. We will be giving some forward-looking statements today, and we actually like to dine out on our cliche of MAG has got a history of turning forward-looking statements into facts. And we'll show you a list of 8 of those already, and just watch what we're saying here. The real theme of today is how the build of Juanicipio is finally happening. But more importantly, or equally importantly, is the exploration potential on this property is still immense, despite what we've found. And we really want that to be the takeaway today. It's real, it's being built. Fresnillo have acknowledged that last week, but watch the exploration potential that Peter's going to take you through. Also in the room from MAG today is Mark Turcott, our VP of Business Development down the back there, Lyle Hanson. We all know Peter in the company, but Peter's very ably supported by Lyle, our Director of Geosciences, and we're 2 very important directors are in the group today from MAG. Derek White, the Chairman of the Compensation Committee, and Richard Colterjohn, the ex-Chairman of the Compensation Committee. So we're on notice today, Peter, to do a good job. We always like to show this slide. It's the ramp into the Juanicipio ore body. We like to show it because it just exhibits what Fresnillo, the operator of the joint venture, can achieve, the way they do things. It's a 5x5 ramp. It's going in for less than $2,000 a linear metre, which is unheard of in the industry, let alone the fact that this thing's got a concrete floor, fully bolted, fully shotcreted. And it's obvious that this is an asset that is built to last. It's built for a generational lifetime. The new news for us late last year was an updated resource from the deeper drilling we've been conducting over the last couple of years, and a new PEA. For those of you who know us, we've been focused on high-grade silver, more importantly, high IRR silver, focus in Mexico. Typically it comes with lead and zinc, and in our particular case it comes with gold and copper. And that's Juanicipio. 44% MAG, 56% Fresnillo, who are also the operator. There's some highlights there on the project. In particular is a significant resource that has grown substantially from the previous resource we released in 2014. Remarkably robust project, a 44% after-tax IRR. With the drilling success, we've upsized this project from 2,600 tonnes per day to 4,000 tonnes per day. But the resource has grown so much already that we now go from a 14-year mine life to a 20-year mine life at the higher throughput rate. And there's more to come. Really strong financial position. The balance sheet's in great shape. We've got over $165 million available. Our share of the build, as per the PEA, is $159 million. So we're in great shape, no debt, and MAG has proven now over the last 3 years an asset of this quality. We've been able to fund the project very efficiently. I mean, most of our capital raises over the last 3 years have been done at 52-week highs. 52-week highs when a lot of the industry was trading at multi-year lows. So we're ready to go. We've got the green light from the partner that they're ready to go, so we're going through the mechanics now of approving the project through the joint venture process, and then we start to break some ground. Tight share structure. As I said, one of the benefits of issuing equity when you're at a 52-week high, you have minimal dilution. We only have 85 million shares out there on issue, and 1350. We're near a 52-week low. The grade hasn't gone down on this. Fresnillo are still building it. There's still incredible exploration potential. So buy now. Now's the time. I don't mean that facetiously. Right? When we make a production decision to move this project forward, it's the first time ever we put a stake in the ground that there's a finite time frame from where we are now as a development company, trading at a 0.7p to NAV, to re-rate to be a silver producer. Silver producers averaging a 1.3 Peter NAV. Fresnillo, the operator of this asset, is more like a 2 to 1 Peter NAV. So we can actually sit down and do nothing for the next 18 months and see our share price nearly double. But we won't do that. We're going to do something. Turning forward-looking statements into facts. We have two main assets in Mexico. Up in the state of Chihuahua, the Cinco de Mayo property. 3 high-grade discoveries on that property. We're currently working on getting access back on the ground with the local community. It's a slow process. Our focus really has been Juanicipio, particularly as this project's had such exploration success at depth. We've upsized it. You know, most of our energies are going into that, but ultimately we believe we'll be back on the ground at Cinco de Mayo. And the timing for that might be ideal if that's when we start to get cash flow out of Juanicipio to then fund the work programs we want to do on Cinco. This is our focus. Fresnillo, in the Fresnillo trend, the Juanicipio project. And you can see here a litany of discoveries down here, all associated with the Valdecanas echelon vein system, other than the initial high-grade vein we found Juanicipio. It's not my part of the talk, it's Peter's, but I'm sure there's more of these echelon veins to come. The Fresnillo trend, the preeminent silver district in the world by far now. 6.2 billion ounces of silver have come out of this area. More than one of every 10 ounces of silver on the planet has come from this area. And you can see here in the salmon colour, the Fresnillo tenements and the joint venture ground nestled right up against that in the blue. We'll zoom in on the joint venture ground. Top right hand corner, the green is where we've purchased surface access from the locals, what we're trying to replicate at Cinco de Mayo. The heart of the system now is the Valdecanas vein. 95% of the metal in the Juanicipio joint venture project is contained in Valdecanas. And the first point to make note of on this slide is that vein continues across the joint venture boundary. It becomes Herias, but this is where Saucito is. The world's largest primary silver producing asset. The Saucito mine, been mined since 2010. An expansion Saucito 2, doubling the capacity in 2014, 2015. We're doing a feasibility study because the joint venture agreement asked for it. We don't need to do a feasibility study. We've got 7, 8 years of operating history on the same vein. Fresnillo have operated in this area for 130 years. So the real essence of what makes MAG such a high value story is I'm going to take you through the metrics of the PEA. And you see an outstanding project on a very conservative study giving you a 44% after-tax IRR. It's not just a great project, it's a great project being built by the people who are probably the best people on the planet to build the 3rd operation on the same vein. So it's very much a great asset being built in a extremely de-risked scenario. Great situation for MAG to be in, an exploration company transitioning into development. Because a lot of us in this table, some of us have been involved in it, have seen how exploration companies can falter at that stage of transition, moving into development and then into production. We like to tell the story of the history of the joint venture and this particular piece of ground. When Peter came on the ground, stuck his heel there and said, drill here, hole 1, discovery hole, into the Juanicipio vein. That's a great story. Very difficult to raise money at that particular time, 2003, 2004. We offered up a joint venture to Fresnillo, who came in. Hole 16 discovered the Valdecanas vein. With an understanding of how these discoveries happened, Fresnillo came back in this area down to the south and found 650 million ounces of silver. But that's great because that's given so much knowledge to the joint venture now. We draw these arrowheads in here deliberately because we know there's a number of these veins have a very high potential to come across onto the joint venture ground. Peter will talk more about that later on. So this is Valdecanas in section, in a long section. About 350 metres below surface we see the Bonanza zone, the west and east echelon vein in that system, and that's what underpins our old technical report of 2012. We put 4 holes down here, sterilisation holes, end of 2014, early 2015, to prove that there's no mineralisation under the Bonanza zone, because we were really keen to get away from Valdecanas. We've got a great asset, one of the highest grade undeveloped silver mines in the world. But let's get away and find the next one, because we know there's more there. But we really mucked that up. Now, we got into deep mineralisation here, very good grades, very wide, up to 5 times wider than the average width of the Bonanza zone. So, fantastic story, and it's now this whole mineralised envelope, which is open everywhere down here, that underpins the new PEA. So these are the resources in the new PEA, a substantial increase from the combined 14 million tonnes that we had previously. You can see the Bonanza zone is primarily indicated, very good grades, very good silver grades, a consistency of gold through the whole system, and even in the Bonanza zone, which typically has lower grade base metals, very respectable base metal grades. The deep zone, it's less drilled, so a greater percentage of inferred. The average silver grade in the world, in the silver world, is about 150 grams per tonne. So at MAG we talk about lower grade silver down there. It's the average of the industry, just relative to what's above it. We call it low grade. So amazing increase in resources, huge metal endowment, and there's more to come just within this system. If you want to look at both these zones in a more box-by-box comparison, you see here, we're over 550 grams per tonne silver in the Bonanza zone, good base metals, 80% of it's indicated, an average width of 5 metres, and it's open out to the northwest. The deep zone, again, greater than 150 grams silver, very good base metals coming in here, much wider, up to 30 metres in some cases, a longer strike length, because fortunately for us, Valdecanas dips into the joint venture ground, and it's open everywhere down there. Here's a comparison of those two PEAs, the one in 2012 and the one in 2017. The capital's kicked up a little bit. It's kicked up because it's bigger and better. We've gone to 4,000 tonnes per day. We're putting crushers underground. We're putting an internal shaft in. All that costs money, and that's what you see in the capital increase going forward. On an IRR basis, it's comparable to the previous PEA. So you're probably sitting there thinking, why are you telling us this is bigger and better? What's so good about this? Well, the metal prices have changed substantially. You can see here the silver is almost $6 lower in the current PEA compared to the old one. In fact, we actually put a fully loaded tax rate into this. So the after-tax IRR is at 36% compared to 25%. So this is by far much bigger and better. And here you see the tonnage increase, but the mine life increased substantially as well. So we're currently twinning the decline now to get all that waste out at the higher mining rate. Ventilation continues, the ramp is starting to drop down now, and we're getting the first level of mining set up. Once we make our production decision here, we get into procurement, the long lead items, we start surface construction, and then in the first half of 2020, the ATM kicks in. We start to get those top Bonanza grade zones, 800,000 gram per tonne feed into the mill, and the money rolls. There's the man kissing the top of Valdecanas a bit over a year ago. You can see both ramps going in here now. Peter was actually on site last week, went underground. In a couple of weeks, both of these ramps are going to be linked up, and we're going to end up with a nice system of one-way traffic down and up. You can see the advance here. All this blue is work that's done just this year. Fresnillo are doing a fantastic job underground on the development. We've seen development rates now that are 7-8-fold what we were seeing 2 years ago. There's a lot more faces to work at now. There's a strong motivation to bring this project online. The mineral processing side, as good as the geology is and the grades are, it's a wonderful deposit. It's epithermal. Big crystals are formed at lower temperatures. So our recoveries are outstanding for concentrates, 90%. We make a 50% lead con with 12.5 kilos per tonne of silver in it. It's plain vanilla processing, SAG, ball, float circuit. And we get the benefit of being located. Tony and I built a mine in Argentina at 14,000 feet. That was tough. This is a hell of a lot easier. we also have the advantage of all of the Fresnillo infrastructure in there. The power line runs past the main gate of the mine. All those sort of things bring a very efficient capital spend in here to bring this high-grade asset online. Here's the operating cost breakdown. You can see the on-site costs, $58 a tonne. They're down almost $10 from the previous PEA, which again was very conservative. Fresnillo are mining Cecito on the same vein for $49 a tonne. So we felt we were too conservative on costs, but we didn't bring it all the way down because we still wanted to have... There's no harm in this business of under-promising and over-delivering. And that's what we've sort of tried to generate with this PEA. Keep it conservative, it's still extraordinarily robust, it's a standout asset, but give yourself some room. On the off-site costs, you can see in here, $235 a tonne. When I told Richard, he nearly killed me. He said, the market's at 50, the market's at $70 a tonne, why are you doing that? Well, you know what, let's just be conservative long term here. It's still a very attractive project. So we have very conservative cost structures in the way we characterise this project. And this just shows some sensitivity to metal prices. And we did an apples to apples up here where we actually put the previous PEA metal prices into the current PEA. And even at the higher tax rate, you can see we've still got a 58% after-tax IRR. The one takeaway from this slide, which I think is good to remember as you walk out of this presentation, is at $8 an ounce silver, $8 an ounce silver puts a lot of pressure on this industry. At $8 an ounce, we just don't keep the lights on. We make a 15% after-tax IRR. That's a unique asset. I mean, I've said most of this, just recapping the PEA, we've changed the mine, we've had to revamp a lot of the stuff underground to make it bigger and better and expandable into the future. The returns are outstanding on it, but there's high potential for exploration success in the future. It's a real box ticker. Always tick the boxes. It's now been de-risked in that. It's been cemented more going forward. And guess what? There's significant exploration upside. So to that end, I'll pass over to the Don, and he'll take us through the exploration section.
Thank you, George. Thank everyone for being here. I think we have virtually every analyst who covers us in the room. That's nice to see. So we'll start with a little video of how the vein looks and behaves and how it's evolved over the 10 or 12 years we've been working on it. The upper part being the two overlapping west and east veins, the Bonanza zone with their resource. What we originally thought was the deep zone, a little strip along the bottom, which, as George mentioned, in 2015 we put these 4 holes down and everything started to blow out at depth in terms of width. The grade came up, especially in this overlap zone between the two. We've continued drilling through August and then through the end of 2016, and the resource that our PEA is built on is the resource to the end of 2016. We discovered the Anticipada vein, another 100 meters into the hanging wall of the east vein. It actually, we've now tracked it back here. It connects to the east vein here in this overlap zone. So this overlap zone is becoming more and more interesting in terms of its importance as an ore fluid upwelling point. This gives you an idea of the 3 ramps coming down in the footwall of the vein, and this is the part of the overall resource that's actually in the PEA. So there's large amounts of mineralization that are not considered in the PEA. That would include the entire Juanicipio vein is not included in the PEA. So there's a lot, as George says, conservative, there's lots of mineralization that's not included in it. So this is what they're building. I was down there last week. We now have more than 10 kilometers of that nice paved ramp going into this thing. The conveyor decline is underway. It will come out the backside and go up to the surface. the crusher area is coming in. So we're going to continue expanding the resource. We have a deviation drill down there now. We have 3 surface rigs that drill what they call mother holes, and then you take splits off of those to try to get these areas around fleshed out with that. It doesn't save you any money, but it increases the precision and accuracy of where your holes go. And if you're drilling a 1,200 meter hole and you're trying to drill a 100 meter grid with 1,200 meter holes, you really want that precision. So this is what we think is going to happen to this lower part of the vein as we move forward. This slide is just there in case the video didn't work. So these are our metal heat maps showing where the values are, and you can really see the strong silver up here in the Bonanza zone, the classic zonation from silver to lead to zinc, and then this copper that George mentioned coming in very strongly at depth. One of the things we see in terms of the detailed assays, and you'll see in terms of the comparison between the deep and Bonanza zone, is that gold is consistent from top to bottom. We're not seeing significant zoning in gold. We do, however, see some interesting coincidences with gold, in that this is the vein thickness. The vein's very wide over here, and there's a big wide sort of vertical zone right in through here. These coincide very nicely with where gold is strongest. And what we're now recognizing, it's really evident in this eastern one, where we have the Anticipada vein, the main vein, and a footwall vein, and gold is high in all 3 of those, sort of within this vertical range, but the gold diminishes a little bit from there. And when I'm saying diminishes, it's going down to 1.5, 3 grams from highs of 8, 9. We've had as much as 60 grams gold come in some of the holes coming in through here. And what we now know is that we can recognize these northeast trending structures. They're mapped on the surface. They've actually been hit in a number of holes that we sort of considered orphaned intercepts. We get a couple of meters of good-looking mineralization and get all excited about it because we thought we had another vein. And we try to drill it off on this northwest-southeast trend, and it wouldn't be there. These line up on these northeast trends, and those northeast trends come in and intersect the Valdecanas vein where the vein gets wide. So the guys who are building the mine, we have a new mine manager down there, told him about this last week, and he starts to get very excited because this is a place where if he ever gets in a position where his throughput isn't quite the grade he'd like, this potentially gives him a place to go, grab a little more high grade, and sweeten things up a little bit. So we're preparing to do some underground drilling to test where these veins are. And we're continuing to see with our deep drilling the nice picture that's emerged of ore fluid coming up in this area along the overlap zone between the 2 veins, and this funnel-shaped skarn system belling out underneath it or funneling out underneath it. So that story is holding together very, very nicely. We also see that our partners and our neighbors continue to drill these veins across the flats into the foothills, coming up into the rugged hills of the joint venture ground, and they have a resource on the Huizache vein. Lyle found, looking at Google Earth a couple of weeks ago, they actually have the collar or the portal of a new decline going in down there. So these vent raises we've seen popping up here south of the Salcito shaft are now being connected to something, so clearly they have some additional discoveries down there. We've recognized that a vein we drilled down in this area is a little bit too high and a little bit too far south for the projection of the Piedras vein, and that's going back on the program for drilling this year. Now, most of the time what we show you is this image of the northeast corner of the claim. But the Juanicipio claim is a lot bigger than that. That little yellow triangle in the corner shows you where probably 98% of the work has gone in to the joint venture ground. It continues for 20 kilometers to the south and 8 kilometers to the west. And these little spots you see here are places where Fresnillo has been drilling increasingly to the south This dark material here represents post-mineral volcanics that sit on top of our mineralized system. There's a big mountain right here that goes up about 600 meters above the valley, so the farther you get in here, the more overlying volcanics you have to drill to get down to where you want to be. Our alteration, which shows up nicely around the flanks here, reappears from under those younger volcanics down here again, and a big target area has been recognized down in this area, 17 kilometers south of the Valdecanas. Now, we now recognize that the historic district over here, which people tried to explain with reference to an upwelling point there where they had skarn and high-grade sulfide replacements, which does about a B-plus job of explaining the zoning you see in the historic district. It's impossible to explain the zoning you see in Valdecanas relative to a source over here. We've got a separate source here. This area down here, 17 kilometers away. If that's 5 kilometers away and they're not related, there's at least one more center down here, probably another center in between. So this is what we're planning on doing this year. Get some rigs out onto some of these outer lying targets. Fresnillo's been doing some drilling on this stretch of the Valdecanas vein to track it in this direction. If they do that, and we're very happy that they're doing that because this vein dips in this direction, and at the depths that they're hitting it at fairly quickly, that's going to come back into joint venture ground. And Lyle's done the calculation and shows that with this orientation cutting across here, we could have 600 or 700 meters of additional vein out there, which would be a nice little sweetener to add to things. But I'm not that big on sweeteners. Sweeteners don't get me out of bed in the morning. What gets me out in the bed in the morning is big scale exploration upside. So all of these areas that have been identified down here are lined up for targets. I showed you those northeasters over here. The one I'm really eager for, and we finally have the permits for, is the Sessantoni kaolinite pits. Kaolinite is an alteration mineral associated with the upper level of this style of vein in the district, and there's been prospecting historically throughout the area where we've worked, where they mine the kaolinite for a ceramics factory where they make toilet fixtures just down the road. And you could mine all of the kaolinite out of this area with a couple of pickup trucks in a couple of weeks. They've been hauling kaolinite at the rate of 200 to 300 tons a week out of the pits over at the west side of the property for 20 years. So this is a really exciting target. There's another component of that target that's exciting. Valdecanas vein dips into the joint venture ground this way. This structure appears to dip this way, suggesting that this rhyolite flow dome complex we've identified in here may be related to a major heat center up here, which completely opens up this area and also opens up some of this area under the younger volcanics here to the south. So that's what gets me out of bed. The project as a whole, it was really fun to go down and spend about 2 hours driving 10 kilometers of ramp underground. It's really getting really big down there. I was completely lost. So our development is moving forward very nicely. The numbers are really good for the UPEA we put out recently, the PEA we put out. The deep zone continues to evolve. You'll see this getting tightened up with additional drilling that's being done. Nice copper credit. That's going to come in line within year 6. So we're accelerating the development of that. The shaft, the collar of the shaft underground has already been, the excavation for that has already been done. And we're going to continue to be exploring for the northwest structures, the northeast structures. Sessantoni, we had a 20,000 meter drill program last year that we only got part of done. We're hoping to add this to a program that's at least that big for this year. Lyle and I will be down on site in a couple of weeks to meet with the guys to talk about that. As I mentioned earlier, most of the analysts who cover us are in the room. We love their target prices, especially concerning the price we're at the moment, so we definitely believe we're on sale. We remain held largely by large funds with serious staying power, so we're very happy to see them. You've heard that Colonial First State is winding up their mining fund over the next year or so. George has been in contact with them. They're not going to do that quickly, so it's not going to be throwing their shares into the market. They're going to feed them into the market. And with that, I will thank you for your attention, but I will make one little correction to what George said. When George said 36% versus 25% as after-tax IRR, what he meant was the difference between 36% and 25% tax rate. So the previous PEA was done with a 25% tax hit. The new one is done with 36. George will tell you that tax planning will probably bring that down, but that's another significant way for the project to be conservative, and I didn't want you going away thinking that the 44% after-tax IRR was really 36%. So thank you very much.